Hey guys, how is everyone doing? This is day two in the 2 day webinar event. So we have 2 days of webinars. Well, we had 2 days of webinars. Yesterday was the first day. Today is the second day. So I guess we're in the middle of 2 days of webinars, let's say. Probably the right way to say it. So yesterday we talked about some of the basics of my trading strategy. Today we're going to dive more into depth and look at some other things. We're going to look at actual setups, how to trade them, how to enter them, and all that kind of stuff. So, how's everyone doing? There'll be links to yesterday's webinar. There'll be links to the recording. Like literally the most common question I'm asked. Is there a link to your webinar? Have you recorded it? Of course I've recorded it. Why would I not record a webinar? It's crazy. Do people actually do that? Do people do webinars and then not record them? Yeah, I know. Khabib won. Pretty great fight. Man, that whole card was amazing. Sorry, I'm just going to talk about UFC for just a second, guys, because I love UFC, I love MMA, and it was just a great card. The Tony Ferguson fight was just unbelievable. The Karate Hottie, her fight was great. Derek Lewis, a lot of people are saying that fight was boring and that Volkov deserved to win, but Derek Lewis just starched the guy. It was brilliant. He just held it all in. He was like a sponge, just absorbing all that damage, and then boom, he just let it out. It was great. And I stayed up until 6 a.m. 7 a.m. to watch it. Nah, I didn't bet. I'm not a gambler. I was thinking I might throw some money on Khabib just for fun, just to add an extra little bit of fun to it, but I just decided not to. I had Khabib down to win, even though I would have probably preferred Connor to win because Connor's British. Well, he's Irish, but you know, same part of the world as where I live, and I love Ireland, great country. So I was like, I wanted Connor to win, but I massively respect Khabib. Until last night, he lost a bit of my respect last night. Anyway. Look, guys, we're here to do a webinar. I'm very sorry for spending these 2 minutes talking about UFC. It's just very exciting. It all happened yesterday. Uh, so so yeah, let's actually get into the webinar, guys. Uh, Time management. I answered your question yesterday. You asked me this exact same question yesterday, and I answered, and I said, nope. Forum is for members only. I'm sorry, but that's just how it is. Forex Mastermind members are the only ones that get access to the forum. I'm not going to open it up public. It's just going to be complete chaos if it's public. We have a great little community, and that's just how it's going to be. I have no desire to manage a public forum. Sorry. Anyway, let's get into the webinar, guys. So, like I said, yesterday we discussed the building blocks of my strategy. So that's support resistance and candlestick analysis. I taught you a little bit about the story of candlestick analysis or the story of price that we interpret through candlesticks. And I taught you how to place support resistance areas. So those are just like the basics. Now we're going to get into some more advanced stuff. We're going to be looking at my not my two most powerful, but two of my powerful price action trading setups. Now, I have 6 trading setups overall. These are 2 of them that we're going to be looking at. They're 2 of the staple setups, let's say. Reversals is where it all started for me. That's where I started my trading with reversals. Continuations is something I added later. So we're going to be looking at basic reversals and basic continuations. We're going to be looking at how to enter trades at the right time. Because, yeah, that's like very important. I mean, if you enter at the wrong time, well, I'll show you what happens if you enter at the wrong time. We're going to be looking at how to set smart targets and stops, or stops and targets. Again, very important. having a target in the right place means it's more likely to get hit. Having a stop in the right place means it's less likely to get hit. So stops and targets, very important. How to manage trades while they're open. And then I really want to do how to manage trades, but if we run out of time, we might skip that one. That's at the end of the list. And we're going to do some Q&A, guys, questions and answers. So please leave your questions till the end. I do not want to answer questions throughout the webinar because it's just gonna throw us off track, right? So I think we can get started. So today we're going to be talking about two trade setups. We're going to be talking about reversals to start with. I'm going to be talking about continuations too. Now, I forgot to start my recording software, which means I cannot draw on my screen. My recording software allows me to draw on my screen. So give me a second while I start it. I always forget this. Here we go. Now I can draw. So, what's a reversal setup? A reversal setup is essentially any kind of setup that is against the trend. It doesn't always have to be against the trend, but most reversal setups tend to be against the trend. So see how price is trending down. This is a bearish trend here. It's just a line, but it's just an example of a bearish trend. Price hits the support area, we enter a reversal. So reversals are taken against the trend. Now, reversals can also be taken when price isn't trending. Reversals can be taken when price is ranging. So let's say price is ranging between these two support resistance areas. There's potential to take reversals at all of these points. So reversals aren't always against the trend, but if it's a trade that's counter to the trend, it's a reversal trade because you're taking a reversal from the trend, all right? What's a continuation setup? Now, a continuation setup, it's an important distinction. You have to get this distinction. You have to understand this distinction because they're two different kind of setups and they're managed in different ways. So they're not managed in the exact same way. So that's why it's very, very important to understand the distinction between the two. So a continuation setup is traded with the major established daily chart trend. So when price is trending on the daily chart in a direction, the continuation trade is a continuation of that trend. So price is trending down, price reverses up to the resistance area, then we take the trade as a continuation because it's a continuation of that overall bearish trend. Now, obviously, this is just the opposite is true if it's bullish. We're not trading only bearish trends. If price was, oops, we jumped ahead there. If price was trending up, right, and it came back down to here, that's a bullish continuation. So, bearish continuations, bullish continuations, bearish reversals, bullish reversals. Whenever I give an example of a trend of a trade, you just have to flip it around if you're taking the bearish side or the bullish side. Right, so that is what a continuation is, and that is what a reversal is. Now let's look at some, instead of looking at pictures, let's look at some real examples. I want to show you guys some real trades. I'm going to show you failed trades. I'm going to show you trades that didn't quite fail, but just kind of went nowhere. I'm going to show you quite a few examples of trade setups. I've marked some of them, but some of them aren't marked here. Orange means the trade kind of fizzled out and didn't go anywhere. Red means the trade failed. Green means it was a good trade. Most of these trades are trades that have either been taken by me or by members of the forum. So not all of these trades have been taken by me. I want to show you guys recent examples. So that's in the last few weeks, or even the last 2 months, let's say. But I've been on holiday a lot recently. So some of these trades I did not personally take, but they were posted to the forum. And people who have been trading my strategy for years took them. So I'm using some examples that I did not personally take. I just want to be clear about that. Normally, I would love to show examples of only trades that I personally took, but like I said, been on holiday, so I didn't really trade much in the last few weeks. So I need to show some examples from other people. Is that everyone okay with that? Does everyone get where I'm coming from with that? Can't show you trade examples, recent ones, because I've been away, so I haven't traded as much as I would normally trade. But these are trades taken by members of the course and members of the forum. Anyway, let's get into it. I feel like I have to give a disclaimer every time, because there's always a few annoying people on YouTube who will leave a comment and say, well, you didn't really take that trade. And then it just drives me crazy, because people have a problem being nice. Just be nice. Anyway, so disclaimer over. Let's get into it. Right, so I'm going to kick things off with this one. I picked this one for a reason. This one's a bit of an old one, but I wanted to go back a little bit to an older one. Actually, we'll do this one later. Let's start with this one. So this is an example of a continuation trade. Now, you may have noticed in that little image I had back there, the continuation trade I showed you, price had dropped all the way down to the support area. I mean, it was just an image of lines, and then come back up. With continuation trades, you don't need price to drop all the way down to the support area and pull back. As long as it drops below the support area, gets at least halfway, that's a good marker that I like to use, halfway between two support resistance areas. So this is a resistance area, or it's a support resistance area. This is a support resistance area. This is roughly, it doesn't have to be exact, this is roughly the 50% mark. Somewhere around here is 50%. So that's halfway between the two. So if price drops down at least halfway between the two, and then pulls back, and then stalls out on resistance, then I'll look for a continuation. Now, I don't always follow this rule. Sometimes I'll trade even if it doesn't drop down halfway between the two. Most times when I do that, it doesn't work out how I want it to. I'll show you an example of that soon. On New Zealand USD, a recent one that I shared to YouTube before I entered it, didn't work out. But continuations are best traded if price drops at least 50% between the two support resistance areas and then pulls back. That's the best type of continuation trade. So yeah, this one was not, in the end, it was not the best continuation, because I'll just leave this line here, actually. I was going to move them around a little bit. Because, yeah, the upper wick was too high, but we're going to get to that in a second when we start discussing stop losses and all that kind of stuff. So we'll get back to that one. But I just want to familiarize you with the trades themselves first, with the trade setups first, and then we'll get into the nitty-gritty of placing entries, stop losses, and targets. So this is what a continuation looks like. Price drops below, so price is trending down. See, price is trending down here. Breaks through an area of support in this case because it's a bearish trend. So it breaks through an area of support, gets a fair way below it, that's 50% between the two. Then it pulls back, stalls on resistance, and then we look for that continuation. So what is happening here? What is the price action? What are the mechanics that are going on here? So what we're seeing here essentially is sellers or bears in control of price for most of this trend. So remember yesterday we were talking about the story of price. So if you look at this trend here, it started here, and pretty much every candle in this trend is a strong bearish candle. There are a few small bullish candles here and here, but they don't last. Those are just minor pullbacks in a trend, and it's completely normal to see these even in a very strong trend. When price is trending down, there's always going to be little periods where bulls try to regain control, but then they fail, and then it continues down. So this was a bearish trend. Price was trending down overall. So that trend came down and it broke this support area. This is a pretty strong support area. It smashed through it. But after it smashed through it, it lost some momentum. It lost a little bit of momentum and it pulls back. This is quite normal because once price breaks through an area, this is when a lot of people, depending what's going on, but this is when trades start to be closed. Not all trades. Some people are going to hold long term, doesn't matter. But what I'm saying is a lot of trades end up being closed around these areas because, you know, they're hitting their targets, blah, 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 blah. So usually some of that bearish momentum gets lost and price pulls back. Then what happens when price pulls back and hits a resistance area? Because this was support, but after it got broken, it became resistance. When support's broken, it becomes resistance. You don't remove it. Support becomes resistance when it's broken. So price breaks below the support area, loses a bit of momentum, turns around, and when it hits this resistance area, what happens? Well, at resistance, there's a lot of sell orders. There's a lot of sell orders placed at this resistance area. The sell orders start to trigger. Sell orders start to pile on. You get sellers, sellers, sellers. And of course, price continues to fall. So that is, in essence, what a continuation is. That's what we're looking for when we're trading continuations. We're looking for a continuation of that overall bearish trend. These pullbacks allow traders to get in at better prices. They allow, and when I say traders, I don't mean traders like me and you. We're retail traders. Even those of us with large accounts, even those of us trading, you know, hundreds of thousands, we're just retail traders. We're a drop in the bucket compared to the banks and the hedge funds. So when I say traders, I mean banks, hedge funds, the big boy traders. I'm not talking about us because we don't have an impact on the market. We are, I hate to say it, but we are insignificant in terms of market movers. Retail traders, we make up almost nothing as a percentage of what moves the market. So when I say traders are doing this, traders are placing sell orders there, I'm talking about the big boys, not us. So traders are placing sell orders up here, and those sell orders get triggered. And why are they placing sell orders here? Because they want to be in this bearish trend. It's a good trend. They want to be in this bearish trend. So when you want to get into a bearish trend, you want to get in at a good price. You don't want to get in at as it's falling. You want to get in at a good price. So if you want to get in when price is around down here, you know it's just broken support. What do? And again, this is it's a bank trader, traders with lots of money. You want to get in a better price because if you get in down here, that's not that great. If you get in up here, that's awesome because you're getting much more profit. So the sell orders go up here at the resistance area, the area that was just broken. Price comes back up and then drops down because all those sell orders are triggered and the trend continues. So this is a continuation trade. We're trading a continuation. We're trading with the trend. Understood? Well, it doesn't matter if it's not understood because we're going to go over a lot more examples. So this was a Euro USD continuation trade. Let's look at a reversal trade. It's a reversal trade here. We're going to look at some good trades first, and then we'll look at some negative trades. And kick things off with some good trades, just because I want to show you some good completed trades, and then I'll show you some failed trades. I think that's better. So this is an example of a reversal trade. Now, with this specific reversal trade, price was no longer trending down. Not really anyway, because price had moved sideways in this narrow band for quite some time. That's 72 days. So, that's quite some time. Over 2 months, price was moving sideways here. So the bearish trend was no longer really active. So this was a reversal, but it wasn't really a reversal of the bearish trend. It was just a normal... Oh, God damn it, stop doing that. It was just a normal reversal. But anyway, nonetheless, this was a reversal trade. Now, let me explain to you the mechanics of a reversal trade. Reversal trades are quite simple, in essence. They come in 3 steps. There's 3 steps to pretty much every reversal. The first step is what I call the preceding trend. Now, the preceding trend could be the major daily chart trend we were looking at, or it could also be a minor trend like this one. This is a minor trend because this is not really part of that big bearish trend because we had all that sideways movement in between. This is just a minor bearish trend, very small, just over a few days, 1, 2, 3, 4 days with a nice little bullish candle in between and a weekend in between, actually. But yeah, this is a minor bearish trend, but that's fine. With reversals, if the trend's minor, that's completely fine. You can do that, no problems. So preceding trend can be either minor or can be major. This one was a minor preceding trend. Second step, indecision. Remember we talked about indecision? What does indecision mean? It means price is undecided. It means neither buyers nor sellers have control of price. So this minor bearish trend drops into this support area, hits this support area, and boom, indecision forms. We went from sellers, or bears rather, bears being in control of price. We went from bears being in control of price to all of a sudden price hits this area and bears lose steam completely and it stalls out. So we got step 1, bearish preceding trend. Step 2, indecision. Step 3 is the reversal trend. That's where you potentially make your profit if you've entered the trade. Now, obviously, you need to figure out where you're going to get into the trade, but we're going to get into that. I just want to show you examples of these trades. Now, reversal trades are riskier than continuation trades. They are riskier because usually you're trading against a trend. So there's an extra element of risk in reversal trades, and you generally make a bit less profit on reversal trades just because your target is usually tighter. That doesn't mean they're bad. That does not mean they're bad. Just because continuation trades are technically better doesn't make reversal trades bad. Because the question in the end becomes, are reversal trades profitable to trade overall? If you take 100 reversal trades, are you going to end up with a net gain? If the answer is yes, then reversal trades are good to trade. You're going to make more profit with continuations, sure, of course, because you're trading with the trend. And to an extent, that saying, the trend is your friend, is somewhat accurate. So you are going to make more profit if you go with the trend, but reversal trades are profitable too, just not as profitable. So, and the other thing about reversal trades, the great thing about reversal trades is that they're so much more common, because reversal trades can form inside of a trend, inside of a major bearish trend, inside of a major bullish trend. You can get reversal trades. Reversal trades are usually pullbacks in that trend, right? So you can trade reversals in a trend, but also you can trade reversals when price is moving sideways in a range. So reversals are so much more common. You get so many of them. So they're really, really good to trade. Even if they account a trend, they're good to trade, guys. Yeah. So you don't really need only a single indecision candle. I just wanted to point that out here. Now, this is another example of a reversal. Price trended up. It was a messy trend, but that's fine. I don't care if the trend's messy. I really don't care. Because the question is, did it trend? And if it started here and over the course of a few days it got to here, it is a bullish trend. Even if in between it moves sideways a little bit, overall it's a bullish trend. So there was a bullish preceding trend, price hit this resistance area. What happened at this resistance area? Stalled out, moved sideways a little bit. Sorry guys, I've got a bit of a cold. So my voice is, it was fine when I started, but you know, when you have a cold, the more you talk, the more it starts to kind of like build up and hurt. So I might be coughing a little bit, and I'm sorry for that, but you know, is what it is. Yeah, so this one, this one's not a very clean or perfect reversal. A few people entered this one, but yeah, it's not a very clean or great example of a reversal, but it's still a reversal. Now, I just want to show you that not all trades are going to be perfect, right? So not all trades are going to be perfect. Like this is a perfect example of a reversal trade because you got that strong preceding trend, you got a single indecision candle, and then awesome reversal. It's almost picture perfect. This one is still a reversal, but it's not picture perfect. The preceding trend was messy. There was 4 indecision candles in total. 4 indecision candles, but it's still a reversal. So they don't have to be perfect. You can still trade them. This one was a reversal too. This one failed, would not have worked out. It was a reversal. We had a preceding trend. We had indecision candle, so that's step 2. We had the reversal trend, but then it fizzled out and shot down. So yeah, not always going to work out, obviously. That's just the reality of trading. This is another example of a reversal. This one you could argue was a continuation, actually, because yeah, you would not have said that the trade had ended by this point. So price was trending down on Euro USD, pulled back up, didn't drop below, and it pulled back up again. So you wouldn't really say at this point that the trend is dead because the trend still looks pretty active. So this would have been a continuation trade. It would have been traded as a continuation. But obviously, this one wasn't a failed trade. Had you held it for long enough, it would have been profitable. But it's highly unlikely that you would have held this for 21 days. No, sorry, 30 days. So holding a trade for a month while it moves sideways, unlikely that you would have done that. So this is an example of a trade that you most likely would have exited early. Either at break even or with a slight gain, because it didn't really move into negative that much. So you would have had to make some pretty significant mistake to exit this one with a negative gain, because it was in positive territory most of the time. But the gain would have likely been very small that you made on this trade, because it only moved down close to this support area very briefly here, and then it pulled back up. So you likely would have exited this one early. Anyway, I think you guys now understand reversal setups and continuation setups. They are pretty straightforward. We're just using what we learned yesterday in order to take them. So now we need to look at the important part. The important part is entering these trades. How do we enter? That's what we need to go into. So I have a simple method for... And also, we need to discuss stop losses and all that kind of stuff. But when I say how you enter a trade, obviously, when you enter, you're looking at your stop and your target. So that's what we need to go over. Now, I have a simple method for this. Simple, easy to remember. It's called step, right? Easy. Step. That's what you have to remember. Step. S-T-E-P. Stop, target, entry, place. Stop use price action to find a safe stop. That's usually your first move when you're looking at a trade. But to be fair, all of these first three moves, they kind of happen simultaneously. Like you're doing all of these at the same time. Your stop, your target, your entry, that all happens at the same time. But it's convenient to break it down like this because it spells the word step, so why not? So yeah, you use price action to find a safe stop loss. You use price action to find a safe target. You place your entry and then you place your trade. But what is a safe stop loss and a safe target? What exactly is that? Now, I like analogies. I think analogies are a great way to learn. So I have a simple little analogy that kind of explains how stop losses work and how take profits work. Now, if you don't like analogies, you might think this is a bit silly, but bear with me here because it's a great way to explain it, I believe. So imagine you're out camping, whatever, and you get stranded in the middle of nowhere, miles and miles from civilization. So this is you. That's you, and you're stranded out in the middle of nowhere, right? You look to your north. To your north, you see this big mountain. Well, compared to you, it looks like a very small mountain because you're huge. But imagine you're like this little dot, actually. So that's not you. You're still here. You get what I mean. So there's a huge mountain to your north. To your south, there's an open valley, completely flat as far as the eye can see. What direction are you going to pick to walk to get to civilization, to try and get out of this predicament that you are in? What direction are you going to walk? Are you going to walk towards this big mountain and try to climb the mountain where it's all snowy and cold on top and try to get over it to get to civilization? Or are you going to walk south across the open valley? Any logical person is going to walk south against it to, over the open valley because it's way less risky. It's going to take way less energy and it's just easier. This is how you need to think about stop losses and targets. This is how you need to think about stop losses and targets. Because what is this mountain to you? This mountain is a barrier. It's a barrier. It's in your way. Towards the south, there's no real barriers. It's an open, flat, grassy plain. So, this is how you think about stop losses. Where do you place your stop loss when you're entering a trade? You place it behind as many barriers as you possibly can. You place it here. This is where your stop loss goes, behind the big mountain. Because when the trade's happening, price is likely to bang up against this barrier, not get through it, and never hit your stop loss. And it's likely to take the path of least resistance, which is where your take profit should go. Your take profit should be here. Because price can more easily flow in that direction. So your stop loss, and this is the core principle to placing targets and stops. And so many people do not understand this. You place your stop loss behind as many barriers as possible while maintaining a reasonably sized stop loss, and you place your target in front of barriers. So with as little barriers as possible. You don't want to place your target behind a support resistance area. You want to place it in front of the support resistance area. Your target, you don't want to have anything majorly obstructive between your target and your stop. How does this translate in an actual chart? Because that's what's important here. So how does this translate in an actual chart? Let's start with this example here, right? There's going to be more examples on other pairs, but let's start with this example here. So, do I place my stop loss? First of all, for those of you who don't know, this tool is just a risk to reward tool. So the red shaded area the central area here, the dividing line between the green and the red here, that is your entry price. The end of the red shaded area is your stop loss price, and the end of the green area is your target price. It's just a little tool that's included in our TradingView's charting package. So you can't get it on MT4. A lot of people ask me that. You can't get it on MT4 or any other platform. It's just a TradingView thing. The reason I'm saying this is just to explain what this tool is. And it also shows you your risk to reward ratio, which is quite handy. So let's zoom in a little bit so you guys can see a little bit better. So where do you place your stop loss? When you're entering the short continuation trade, where do you place your stop loss? Do you place it down here? Of course not, because that's super tight. There's no real barriers in between this stop loss and your entry price. Let's imagine your entry is around here. Just for now, let's imagine the entry is around here. So where do you place your stop loss? First of all, the first major step is usually to try and get it behind the resistance area. So this is the resistance area we have placed. We want to get it behind this resistance area. We want to get it beyond the resistance area. Why? Because a resistance area is a barrier to price moving up. When price hits resistance, bears enter and price usually drops down. So we want to place it beyond the resistance area. It's very important. Next, we want to place it beyond as many recent highs as possible. It's going to drop down to a smaller time frame to show you guys what I mean. I'm not sure if we can really do that with this. No, not really. We'll stick to the daily for now. We want to place it behind as many recent highs as possible. So, why do we want to place it beyond a recent high? Now, again, just so everyone understands, if we're trading a bullish continuation, we want to place it beyond recent lows and beyond support. This is a bearish continuation, so we're placing it beyond recent highs. So we want to place it beyond a recent high. Why do we want to place it beyond a recent high? Because highs, when you're trading a short trade and when price is trending down, highs are a barrier. Highs are a barrier. Resistance is a barrier. Highs are a barrier. So placing this beyond resistance and beyond a recent high means we're placing our stop loss beyond two barriers. Right? That's what we want to do here. We want to place our stop beyond two barriers. Our target, where do we want our target? That's pretty simple. Our target, we want to place that in front of barriers. So what are barriers here? The first barrier is this support area. The support area that we have placed, that's a barrier. Do we want to place our initial target beyond this barrier? No. Because placing our target beyond this barrier is risky. And we can see that because we can see when price hit here, it pulled back. Now, of course, it continued down eventually, and that's fine because it's a continuation and you're likely to extend this target anyway, and we'll talk about extending targets, but that's not the point. The point is your initial target. When you're first getting into this trade, what do you want to do? You want to set your initial target before the next major barrier. So that's where the target goes. You want to have a risk to reward ratio. This is also important. Risk to reward ratio of at least 2, which, to be completely honest, on this trade would have been tough. But you want to have a risk to reward ratio of at least 2. So this is close enough, 1.98. So that's a risk to reward ratio of 2. What is a risk to reward ratio of 2? That just means your target's double the size of your stop loss. That's how you stay consistently profitable as a trader, by having a bigger target than you do a stop loss. So your wins are bigger than your losses. That way, even if you have a 50% win rate, you're still making money trading. Obviously, the goal is to have more than a 50% win rate, but just, as an example. So you maintain a risk to reward ratio of at least 1 to 2. Especially on continuations, I like to have 1 to 2 as my initial target. Reversals, I have my target a bit lower, but we'll talk about that in a minute or two. So place your stop loss beyond barriers, place your target in front of barriers. You can always extend that target down later, but initially the target should be ahead of barriers. As for the entry on this one would have been a little bit tough. Simply because with entries, now, just want to drop down to a lower time frame. You don't need to drop down to lower time frames for entries. That's not what I'm doing here. I just wanted to see if I could yeah, okay. It's probably not the best example to start with because this example has a bit of an unorthodox entry. Probably should have started with an example that had a bit more of a simple orthodox entry. But the point is, with the entry, what we want to do is we want to enter when we see that price is starting to push down, starting to trend down. So we want to get some confirmation on our entry. How we usually get confirmation is when in a bearish trend, when the low is broken, the previous low is broken. So in this case, that previous low would have been here because this was the lowest point price reached. So almost by default, when the next candle opened, because the previous candle closed at a low, the low was going to be broken. So you can't really count that as a low. What you can do in a case like this is drop down to a smaller time frame and look for a different entry. So you can drop down to a smaller time frame and set your entry beyond a different low. So in this case, we got this candle here. So price pulled back up. You could have set your entry beyond that low and got in, or you could have set it beyond this low here. So you could have looked at that low. You know, this one would have been a bit tricky to enter. So it wouldn't have been the easiest trade to enter, but you could have entered when that low was broken. You're just looking for a recent point at which price you're essentially looking for confirmation that sellers or bears have taken control of price. So confirmation usually comes by having some significant lows broken that have not been broken in a few hours at least, preferably a few days. But this one is a bit of an unorthodox entry. So we'll come back to this one when we're talking about some more complex entries. Let's look at a bit more of a simple entry. That way you guys get a better idea of how to enter a trade. So we'll look at this reversal trade here. Because this one was a lot simpler. Let's remove this line. Sorry, guys. This cold is just getting worse and worse. It's really, really affecting my throat. Right, so entry on this one. Well, first let's discuss the stop loss. Stop loss is usually the most important part of a trade, and you want to have a good stop loss. So I usually start things with the stop loss. Where do I want to place my stop? So I'll look at this setup, and let's move this for now. I look at this setup and I say, I want to place my stop loss beyond some barriers. What are the logical barriers here? We've got the support area. That's the first major barrier. So I want to place it at least here. But then we got the low of this indecision candle because we're entering after this indecision candle has already closed. So we place our stop loss beyond the low of that indecision candle. We're placing the stop loss behind two barriers. for targets, what we want to do is we want to place it in front of barriers. So again, this is our first major barrier, this resistance area. We want to place our target in front of barriers. So now we have an idea of where we want to place our stop. We have an idea of where we want to place our target. Now we got to figure out the entry. Now the entry on this one's quite simple. We want to enter above the high of this indecision candle. So that indecision candle, that gives us a significant point at which, if that point is broken, it indicates that buyers are gaining, or bulls are gaining control of price. Bulls are gaining control and they're going to start trending up. So once that high is broken, you can enter the trade. There. Now, usually what I like to do is I like to wait for a break of the high and then... Sorry, guys, I'm really struggling to talk with this cold. I'm trying to muscle through it, but it feels like I have acid in my throat and it's just bubbling away. So it's a bit, if you notice me kind of like pausing a little bit, it's because of this cold. So yeah, just bear with me here with this. So yeah, the entry, we want to place it above the high, and then I usually add a few more pips. Now, by a few more pips, a lot of people ask me exactly how many pips. There's never an exact number. I usually eyeball it, but it's around 5 to 10 pips. It's usually sits somewhere around 5 to 10 pips, because the thing is, if you enter as soon as a high is broken by like half a pip, then you can't necessarily say that high was broken. You could say that high was probably equaled, but it wasn't necessarily broken. So I like it to break the high and then go a bit more. So the high of this candle was here. I like it to break that high and then push up a bit more. Sometimes I'll even let it push up 15 pips and then I'll enter when it pulls back. So push up enough and then enter when it pulls back. That's a bit of a retrace entry. That's completely fine. Sometimes you could even put your entry down here. Now you don't enter as soon as it gets there. You enter after it gets up high enough, after it gets up above that indecision candle, and then pulls back down. That's your entry. So that's a retrace entry, but that's a bit more advanced. So let's not bother with that for now. What we're looking at now is simply price breaks the high of this indecision candle, then plus 5 or 10 pips, something like that. That's where your entry goes. Entry there. Your stop loss, you want to place it below the low of indecision. And your target, you want to place it at the next resistance area, initial target. You could always extend this, not a problem to extend, but your initial target, you want to place it at the next resistance area. Now, the thing with stop losses, another very important thing. I always see people who are new to trading, new to my trading strategy, they'll use the absolute minimum stop loss they can use. So my rules for stop losses are generally beyond barriers, so beyond the support area, beyond the low of the indecision candle or any other recent low. And what they do is they'll do their stop loss like this. 1 pip below the low of that indecision candle. That's their stop loss. That is the minimum allowable stop loss. But minimum is not a goal. Minimum is not a goal. The minimum is the minimum you can do and still get into a trade. So the minimum is not a goal. If you can place your stop wider and still maintain a good risk to reward ratio, do that. Because a wider stop is less likely to be hit. The more this stop is below the low of that indecision candle, the less likely it is to be hit. And this is just completely logical. If your stop loss is down here, it's not going to be hit for the next 5 years probably. Obviously, this is a stupid stop loss. You wouldn't have a stop loss like that because you're going to get a margin call before it hits that stop loss. But I'm just trying to go to an extreme to illustrate this example. The wider your stop, the less likely it is to be hit. So if you can have a wide stop while still maintaining a good risk to reward ratio, and good is defined by anything over 2, then make your stop a little bit wider. Oh, awesome. My awesome girlfriend, who's in this room, I mean in the YouTube room, you might have seen her, Liz Art. She's just brought me some tea with milk and honey. Sorry, some tea with lemon and honey, which is awesome because my throat is really, really bad right now. Anyway, yeah, there's going to be a recording, guys. I hate that question. I get it asked so many times. There's always a recording. Right. So your stop loss, if you can maintain a 1 to 2 risk reward ratio, put that stop loss wider. The wider the stop loss, the less likely it is that it's going to be hit. So put that stop loss wider. Don't be afraid to do it. Don't stick to the minimum stop loss. The minimum stop loss is just the minimum. If you really want to get into a trade and the resistance area is kind of like here, very close, but you still want to get into this trade, then you might have to use that minimum allowable stop loss to get into that trade, because that's going to give you a risk to reward ratio of 2. But that's just the minimum. Don't go with minimums. Make your stop loss wider if it needs to be. Or if it can be, rather. Make your stop loss wider. Wider stop loss, usually a good move. That is helping. Right. So stops and targets, they're pretty basic in essence. The logic here is to place your stop loss behind as many barriers as possible and place your target in front of barriers. So this target is in front of barriers. Where's the major barrier here? It's this resistance area. Do I place my stop loss beyond the resistance area? In this case, it would have been fine because it smashed straight through the resistance area. Did I say stop loss? I meant target. Do I place my target beyond the resistance area? In this case, it would have been fine. But in a lot of cases, when price hits that resistance area, it stalls out. It stalls out, and if you place your target beyond it, it might never get hit. So that's how you do targets and stops. It's 16:52. We don't have a lot of time left, and we still need to do Q&A. And I still want to quickly talk about extending trades because it's a bit of an important aspect. So yeah, let's talk about extending trades. There's a lot of examples I wanted to show you, but I don't think we're going to get to them. There's a lot of example trades here. But yeah, I want to talk about extending trades. I think that's an important subject. Now, there's a simple trick to extending trades. And this is how I do it. When you first enter a trade, you set your target. So let's say we're entering this trade, we set our target, our stop loss, this is the trade. Now, we want to extend this trade if we can, because when that 2 risk reward ratio, that 1 to 2, that's good, but 1 to 3 would be better. 1 to 4 would be even better. So we want to extend this trade if we can. So how do we do that? Well, it's actually pretty simple. So if I'm at my chart, what I'll do, or even if I'm not at my chart, is I'll just set an alarm. So use chart alarms. Pretty much every modern trading platform has chart alarms. So you set alarms here, which on TradingView, you do it by right-clicking and clicking Add Alert. You'll set an alarm. So where would your alarm go? Your alarm would go before your target. How many pips? Up to you. I usually do about 20, 30 pips before my target, depending on the pair, because some pairs move a bit faster. But let's say we'll set an alarm here. I eyeball it. I literally eyeball it. I don't have an exact number for that. I eyeball it. I say, yeah, around about here is good. I'll set my alarm before my target. When that alarm rings, I'll get a message to my phone. My phone will ring. Then I can come back to my chart and I can say, okay, what's going on right now? And I'll look at my chart. A lot of times I'll drop down to a smaller time frame to get a bit of an idea of what's happening. To get a bit of an idea of the price action, drop down to a smaller time frame. If price is pushing, let's say we're in this long bullish trade. If we're getting strong bullish moves, so bulls are in control of price and we're getting a strong push up, then I'll say, okay, what I'm going to do right now is I'm going to remove my target for now, and I'm going to set some new alarms. So I'll set an alarm maybe here or here, somewhere. I'll set an alarm, oops. Let's go back to... Right. Sorry, guys. Yeah, I just want to go back to here to reset this to roughly where it was. Yeah, that's around about right. So let's say my target was here. Let's put a line there to mark the target because this is going to get a little bit confusing otherwise. That's where my original target is. But I removed that original target and now I set an alarm above it. Unless I'm going to be at my charts watching, I set an alarm above it where my original target was, and I set an alarm below it. Next time the alarm rings, I come back and I check and I decide, do I want to close this one out now because it's pulling back, or do I want to keep it open? Now, this is where it gets a bit tricky because here you need to be able to read and understand price action. If you're watching closely, you'll see price action signals that tell you whether to extend the trade. They're a bit more complicated and it's hard to explain them all. So I can't really get into that here. We just don't have the time anymore. But the main point here is to use alarms to your advantage. Set an alarm before your target is hit. Because if you set an alarm before your target is hit, then you come back to your charts, you'll see if price has a lot of momentum. And if it has momentum, if it's trending up heavily, pushing up, such a strong move, why would you exit the trade straight away? You may as well leave it open because it's pushing up heavily and you could extend that trade. You could potentially get more profit out of that trade. That's basically how I extend trades. I do it by using chart alarms. Now, this webinar is supposed to run about an hour. I think I've covered most of what I wanted to cover. I wanted to show you guys more examples. A lot more examples, because look how many I had marked out for you guys. Maybe I was a bit optimistic with the amount I could show you in this webinar, but I had a lot marked out for you guys, and I think we've only really done 2 examples. Wait, let me quickly show you this example, because this is an example of a trade where it was a good trade setup. It was a good trade setup, but it just never really went anywhere. So probably have a wider stop on this one. Let's just say the entry was, I don't know, around about here. I probably would have used a different type of entry. I probably would have used an advanced retracement entry. We don't really have time to go over advanced entries at the moment, so that doesn't matter. We'll just say the entry was down here for this one as an example. And your target was here, 1 to 2 roughly risk-reward ratio. Now, see, this one came down, pulled back up, came down again, got so close to that 1 to 2 target you would have had, pulled back up. So this was basically 30 days that it was doing it. Or was it 30 days? I don't think it was. It was close to 30 days that it was doing this, 27 days. So that's quite some time where price is just moving sideways. Now, would you keep this trade open? Personally, I wouldn't. Now, yeah, this trade would have been profitable in the end. Had you kept it open, it would have eventually hit its target. But one, you would have been in the trade for a month, pretty much. So you would have had a percentage of your account, your tradable, your account balance or your capital, whatever you want to call it. You would have had a percentage of your capital locked into a trade, not doing anything for you really for a whole month, which is not good because you'd rather have that free to trade in a different trade. You would have had all of that locked in for a month. And most times when price doesn't hit your target in about a week on a daily chart trade, if you're trading smaller time frames, and you could trade this strategy on smaller time frames. We've only looked at the daily chart, but you can trade this strategy on the 4 hour, on the 6 hour, on the 8 hour, on the 12 hour. We've only looked at daily charts so far because we just have run out of time. But you can trade this on lower time frames. Point is, if you're in a trade and it's moving sideways for like 5 days, you just want to close that trade out. You don't want to keep it open beyond that. You may as well close it out, free up that percentage to place it in another trade. Usually, this is called a timed stop loss. Now, there's advanced ways for figuring out the best time stop loss, but we can't get into that. But just a generic timed stop loss is for this strategy is about 5 days. If it's not if you're trading the daily chart, if you're trading the 4 hour chart, it's a lot less than that. But if you're trading the daily chart and it hasn't moved to your target in 5 days, then just close the trade out. So this trade would have been closed out. Sorry. I just want to clarify something there. When I say if it hasn't moved to your target, I don't mean the trade has to complete within 5 days. I mean if it's not doing anything significant within 5 days. Sorry, I should clarify that. So if it's just moving around sideways, right? If it's actually, let's say your target's down here, you have a wide target. If it's actually moved down and you're in a fair bit of profit, you can keep that trade open. But if it's just doing nothing, if it's floating around your entry point or just below your entry point for 5 days, that's when you want to close that trade out because there's no point keeping it open then. But yeah, if it's making some good progress, of course you keep it open. But this one wasn't. This one pushed down to here. It made a bit of progress, but then it went straight back up. And didn't really do anything, did it? So 5 days. If it doesn't really do anything in the first 5 days, I just say, I'm going to get out of this one. So this one had some time to do something, but yeah, it never really did it. Pushed down, came back up at entry, made another attempt, blah, blah, blah. But yeah, guys, I really wish I could have showed you more examples, but we're running short on time. My throat's getting worse and worse, but this tea that my awesome partner brought me is helping a lot with that. So let's do the Q&A, guys. I'll move this over. It's easier for me to read on this screen. Goodland FX. No, this does not follow. Remember how I said I want to see price dip at least 50% below? This one has not dipped at least 50% below, so I'm not really looking at it as a continuation. I I mean, you could trade it as a continuation if you want. I'm not saying that I never do this. I did this on New Zealand USD the other day. New Zealand USD is in a strong bearish trend, massively strong bearish trend. I saw an opportunity for a continuation on New Zealand USD here. It's easier seen on the smaller time frame. So let's drop down to a smaller time frame for this one. It's easier seen on a smaller time frame. So price broke below. It was in a massive, massive downtrend. Came back up and it stalled out on this resistance area. Oh, actually, I think I might have entered up here. I think the support resistance area was a little bit different at the time. Yeah, I think I entered up here. But anyway, point is, price broke below, came up, and I entered a short continuation. Now, it looked like it was going well at the start. Then it came back up, didn't do anything. Eventually came back up and it hit my my stop loss. Or maybe I exited that one early. No, I think that one hit my stop loss. I can't remember. Yeah, I'm confused. Anyway, it doesn't matter. That's not the point. Point is, that was, and I shared this trade on YouTube. I shared it in my YouTube analysis. So the point is, I didn't really follow my rules properly on this trade, where it hadn't really dipped 50% below. But I thought that the trend was strong enough that it was okay. But, you know, I broke my rules and it didn't work out well. But I am kind of flexible with my rules. I am flexible with my rules. There's sometimes extenuating circumstances, because you can never be black and white with trading. There's sometimes circumstances where it does make sense to take a little bit of extra risk and enter the trade. And this time it did make sense. It just didn't work out. With Euro USD, I mean, it doesn't really make sense. And also, furthermore, beyond this, the fact that it's not gone down enough, it's not even really a bearish trend anymore. It would be hard to argue that Euro USD is still in a bearish trend at this point. The bearish trend was here. When it got to here, it moved sideways for a while. It did push back down, but then it came immediately back up, and then it's moved sideways since. So I would not consider Euro USD in a bearish trend anymore. Therefore, you cannot trade it as a continuation trade because it's no longer trending down. So no, that's a long answer to your question, but no, I would not consider that a setup. Sonja, when you're extending a trade, do you adjust your stop loss as well? Yeah, I do adjust my stop loss. I do tighten my stop loss. We've done a massive case study based on trades submitted by a lot of people on the forum using my trading strategy. Hundreds of trades, because we do case studies in the group. And there's like hundreds of traders in the group, so there's a lot of varied data. We do case studies to take a look at the most efficient way to tighten your stop loss. Basically, having a trailing stop, but a manual trailing stop, because a manual trailing stop is better. Point is, there was a lot of data collected for it, and it's not something that I can simply explain all the mechanics of tightening your stop loss as the trade progresses. So I can't get into that. I'm not 100% sure what you mean, but I don't exit and re-enter trades. Oh, I think I get what you mean. So you close out the trade at your original target, and then if it continues, you re-enter a trade. I mean, yeah, if you want to. You're going to be paying double fees, spread-wise or commission-wise. Yeah, you could do that. But I don't see it making much difference. Because if the other trade fails, it's just going to hit your stop loss and it's going to be negative. Anyway, I don't really see much difference. I don't do that. Do you move your stop loss? I already answered that. Do you close trades over the weekend? Again, this is another one of those things. With trading, like a lot of people like black and white answers. Do you hold trades over the weekend? Yes or no. But there is no yes or no to that because there's a lot of factors involved in deciding whether you want to hold a trade over the weekend. I will hold trades over the weekend. I prefer not to, but I will hold trades over the weekend if it makes sense to. When does it make sense to? I'm just going to give you a very basic example, but there's a lot more to this. Like, let's say I've entered this trade here. Actually, let's go with an actual decent example because that was a failed example, so can't really use that one that well. Let's say I've entered this trade here, and so that is the indecision candle. This is the actual entry candle, right? So the trade is something like this, roughly. Now, price breaks up above my entry, and this is the Friday candle. This is Friday. Now, if price is this close to my entry and it's Friday, I might say to myself, yeah, this isn't really going. I probably wouldn't have entered this trade, to be honest, but I might say to myself, this isn't really going anywhere, so I'm going to close this trade out. If price is like 90% of the way to my target, let's imagine price is here, 90% of the way to my target, I would maybe say, yeah, close enough. So I'll just take it out. I won't hold it over the weekend because I may as well take it out. It's close enough to my target. If price is 50% of the way to my target, I might say, well, it's close to my target, but not close enough for me to take profit. Even if it gaps down at the open of the next week, it's probably not going to gap down enough to take me into negative or to hit my stop loss. So I think it's worth the risk to keep this open because I believe that it's going to keep running over the weekend. At the start of the new week. So, yeah, essentially it depends at where the trade is at the time. If it's close to the end, then yes. If it's right at the start, then... Sorry, if it's close to the end, then yes, I'll close it out. If it's right at the start, then yes, I might close it out. If it's in the middle, then I'll probably keep it open. So, like anything in trading, there's no simple yes or no. There's a lot of moving parts that you need to think about. Adam Backy, no, I don't really use the dollar index. Sorry, I'm skipping a few questions just because I'm just reading the ones that pop out at me. Do you use the dollar index? No, I don't use the dollar index. Look, I don't have any problem with people who use the dollar index. I don't have, and a lot of people use the dollar index in conjunction with my strategy, and it works well for them. I just personally have found that the dollar, sorry, I just personally have found that the dollar index, it has a negative impact on my trading because I'll sometimes get trades where the dollar index, like let's say the dollar index is suggesting that the dollar is weak, whatever, and I've got a long trade on USD CAD. I'm simplifying a lot here, but I've got a long trade on USD CAD. I might say to myself, I'm not going to enter that long setup on USD CAD because it looks like the USD is weak, and I'll stay out of that trade. And I found that happens quite often, and then the trade works out anyway. So I found that the dollar index has a negative impact on my trading personally because it keeps me out of trades that I would have entered and that end up being profitable. Now, I've only tested it twice over the years. Over the 17 or so years I've been trading, I've only tested it twice. Maybe if I give it some more thorough testing when I have some time, I'll find that it's useful. But right now, I have found that it has a negative impact on my personal trading. But like I said, a lot of my students use it successfully and they find that it's a major asset. So it is up to you. I would recommend testing for at least 30 trades and then seeing what the results would be if your results improve. Do I trade 15 minutes and 1 hour charts? Yes, I do. I do 15 minute, 30 minute and 1 hour chart trading, but that is well, it's basically, it's very similar to this, but it's a different strategy, but it uses, it still uses price action and support resistance. Because with these trades, you'll find some weeks where you just don't get that many trades. So in those weeks, it's usually because price is ranging very tightly, or it's just not moving, essentially. But then if you drop down to the 30-minute chart, then there's a lot of movement there. But sadly, those are members only, so we can't get into that. And Matthias, yeah, you do tie in that stop loss to a winning position, yeah. Yes, Marcelo. My daily chart entry is based on the daily chart analysis. But all these support resistance areas, they work fine on the 8 hour. So you could trade these on the 8 hour. You could trade these on the 4 hour. You could trade these on the 6 hour. I've only shown daily chart examples because we ran out of time. I want to show more examples, but yeah. Can you trade this strategy on the 1 hour time frame? No. You need to trade a 1 hour time frame. Trading is different. It's very similar. You use the same kind of concepts, but you're looking for slightly different things on the 1 hour chart. Can I enter long on a higher time frame and short in a lower time frame using the same currency? I mean, yeah, you can technically. If you have two different brokers, they're all depending on the country you're in, but that's by the country, I mean, because different countries have different rules on whatchamacallit, hedging. But I guess you mean with this strategy, I don't really see any scenario in which it would make sense to do that unless you're using my 1 hour chart trading strategy, which again is slightly different, and you're long on the daily. You could probably take a short on the 1 hour. You know, that would make sense, but yeah, I mean, it's not really a common thing I would do. No, I don't have any recommendations as to a company. Do you work with limit or stop orders or only market execution orders? I work with all of them. There's no reason to limit yourself. Whatever's useful for that specific setup. Limit orders are useful in certain scenarios. Stop orders are useful in certain scenarios. And sometimes you just want to get into the trade, so you use a market order. We're actually doing a webinar. Actually, no, never mind, sorry. If price retests a support resistance area, does that mean next time it will be easier to break it? No, not really. I mean, price retests support resistance a lot. I guess if it's getting further and further beyond that area every time, like, so let's say it's at a resistance area, right? Actually, here is a good example. So we got this resistance area up here. Now, price tested this resistance area multiple times, but each time it wasn't getting above the initial test. You could actually argue that each time it was getting lower or slightly lower. There were some highs that popped up above it a little bit. Yeah, but each time it got lower, almost. So in this case, this resistance area was not getting any weaker. If it was the opposite way around, where it bounced from there, and then each time it progressively got higher and higher in that resistance area, then I would say, okay, it looks like this resistance area is getting weaker and it's going to break. So you should pay attention to highs and lows in that case. Oh God, there's so many questions, and a lot of them are referring to examples which I no longer know which example you're referring to. Abdul, I've got no idea what example you're referring to, man. The order flow tool. Someone's asking about order flow tool. Where was that? I just want to double check what that is before I say anything. Sorry, I haven't got an encyclopedic knowledge of every tool or every indicator in Forex. Yeah, it's what I thought it was. No, order flow is completely useless in Forex. You just need to think about it logically, right? What percentage of volume are retail traders in the Forex market responsible for on a day-to-day basis? What percentage? The percentage is under 10. I believe, I said this yesterday, but I'm going to go through it again. I believe it's under 5. I can't remember exactly, but it's something like 4% or 6% or 5%, something like that. All the retail traders on the planet, that's me and that's all of you guys, we're responsible for a tiny 4, 5, 6% of that order flow every day on the Forex market. Of that volume, sorry. So we have almost no impact. Almost no impact. So when you look at order flow, which is usually data that comes from a specific broker, there's thousands of brokers in the Forex market. You're looking at order flow from one broker that has only retail traders, maybe a few institutional traders trading there. That broker is giving you information for like 0.0001% of the Forex market. The order flow for almost nothing. Because retail traders, there's only like 5%, are only responsible for 5% of the volume. Out of the tens of thousands of brokers, if you're looking at the order flow for any single broker, that's 0.0 something percent of the volume. Why would anyone think that that has any importance or significance as to the overall Forex market? The order flow from 0.01% of traders. Retail traders, mind you, which most retail traders are losers anyway. Why is that order flow important? It's just logical that it is completely useless. It is useless data. Order flow, volume, whatever, all that stuff. In the stock market, it is very, very useful. There are traders in the stock market who use order flow data only, not even charts, I've heard of traders who use order flow data on a spreadsheet in order to take trades in the stock market, and that's great. But the stock market has a centralized exchange, so all orders flow through a single place. In the Forex market, that is not true. There's no centralized exchange. Order flow is completely useless. Sorry, it just annoys me. This whole order flow thing, blah, blah, blah. Oh, oops. I had that pause, so. When I place my trade on the daily charts, do I use other price action information? Kind of, yeah. I mean, I'm always switching charts to get an idea of what price is doing. So I'm always switching charts and moving around. So I don't really intentionally say, okay, I'm going to go look at the 8 hour to get some extra information, but I'm always switching and looking and trying to understand what price is doing in an area. I'm always reading the price action. I'm always reading the candles. I'm always asking myself, who is in control of price? What are the best trade setups? I mean, we went over this. There is, like, how do you define what the best trading setup is, man? Like, how do you define that? Continuations, they generate more profit on a trade by trade basis. So if you compare your average continuation to your average reversal, continuations give you more profit. Great. So now I can say continuations are better. But no, I can't say continuations are better because reversals, there's a lot more reversals. So there's maybe like 3 reversal trades to every single continuation trade. So if I'm comparing by the amount of trades I can take, I would say reversals are better because there's way, way, way more of them. So there's so many different metrics that you could judge what is the best trade setup by that there's no real definitive answer. A lot of it comes down to the trader themselves. What do they think? What do they want out of trading? Do they want a lot of trades? Then reversals are going to be awesome for you. You're going to make less profit per reversal. You're going to take more losses because they're riskier. But in the end, reversals are still going to be awesome for you because there's so many more of them than there are continuations. But if you're happy taking a few trades a week, then go for the continuations because they're going to make you more profit. So there's no such thing as the best trading setup. How do I use lower time frames? I just switch to lower time frames and read the price action. Watch yesterday's webinar. Do I have a paid training service? Yeah, there's a course on my site. It's closed at the moment. Closed in the sense that we're not taking new students at the moment. But if you sign up to, let me show you. If you sign up to the waiting list, you'll get an email notification when it's open. Guys, there's a lot of questions, and I know I missed a lot of them. I don't know the percentage of what. I'm assuming you're talking about the order, the percentage of traders that make up the thing. It's a report that's released like every 5 years, and I read it quite a while ago, so I can't remember the precise number. I need to track it down again. It's a report done on the forex market. So they'll look at all the numbers, and they say what retail trading, what percentage retail trading and all other forms make up of the forex market. And yeah, it's under 10. I remember that. After indecision candle, a new candle forms and gives us panic movement due to news. Oh, right, yeah. Yeah, I mostly ignore news on my trading, so if I get a break that's due to news, I'll still enter. Do I place multiple targets? Sometimes, yeah. Sometimes I'll place multiple targets. So remember how I was saying that I'll set an alarm? Remember how I was saying that I'll set an alarm? Oh god, my voice is getting worse and worse. Remember, or my throat rather, how I said I set an alarm below my target? Sometimes instead of removing my target, I'll make it so my target only takes me out of 50% of that position, and then I'll let the other 50% keep moving if it can. So I'll lock in some profit at my original target. After reaching target, we see price action strong towards our trade direction. I got no idea what you're talking about, Abdul. Jacko Linko. Does the close of a candle above support resistance can be considered as confirmation of a trend change? No. No, it can't be. Jesus, man, relax. I can't answer every single question the second I see it. Can you just not spam? I'll get to your question. The price of the course varies. There is a lot of different. There's a lot of different options. Just send me an email and send an email to the support on the website, and it will be explained. I can't go through it now. There's a lot of different options. It's not just a single thing. Where's the stalling of price? In this example, price didn't stall. What? I'm confused. I mean, if you just joined, you missed the whole webinar, so I can't really go over everything again for you. You're just going to have to watch the recording, man. Can we earn by trading only one chart pattern? Yeah, of course you can. I mean, if you're trading just one setup, you can be profitable. You're limiting yourself a bit, of course, because why not trade other setups? But yeah, you could trade just one setup. Well, it took 27 days and it didn't reach the target, so I don't really understand your question, man. I'm sorry. And my voice is just going to start going. How do I develop my patience? By answering questions in webinars. It's a massive test of patience. When someone like spams in like the same question 60 times in a row to try and get your attention. Normally I don't lose my patience, but I have been a little grumpy because my voice is falling to pieces here. No, I'm not saying you haven't said anything bad. You haven't spammed in any questions, Richard. I wasn't directing that at you. I was directing at the people who keep spamming the same question over and over. How do I develop my patience? To be honest, it's just years and years of trading, but it's also being in a comfortable position. So if I was trying to grow my account right now, if I didn't have a decent sized trading account and I was trying to grow my account, I would definitely want to trade more. I'd be less patient. And that's just normal. There's nothing wrong with it. I'd be wanting to get into more trades. But now I'm in a comfortable position where I can probably survive off one trade a month. Obviously, I don't want to, but I'm just saying, just like if I was taking one profitable trade per month every month, that's household bills paid and everything. So my drive to take trades is not as strong as it once was. Therefore, I can afford to be a lot more patient. So, I don't want to pretend that I'm some kind of like amazing mastermind guru, that I have complete control over my emotions. A lot of it comes down to me just not needing to take every single trade I see. Therefore, I can afford to be patient. I can say, yeah, I'm not going to take this one because it's not quite right yet. But that being said, that is one of the reasons I am patient. There's also other reasons, of course, and that's just developed through trading for a long time and getting used to what the chart does. The biggest lesson that I've learned by staring at the charts is that you usually have quite a long time, especially when you're trading the dailies or the 12 hours or even the 8 hours. You have quite a long time to get into the trade. If you don't get in on the initial push, a lot of the times it's going to pull back and you can get in on the pullback. So you don't need to get in on the initial break. So like even this one is just an example of that. So the entry is here right now, but remember the entry would have been wider than that because we like to add 5-10 pips or so. So this was the initial push. This is where a lot of people would have entered. But it came back down eventually, and the next candle, this is a whole day later, it came back down to that. So I personally know that there's usually not a rush to enter a trade, but that's because I've been doing it for years. So I understand this and I'm used to it. I'm used to the chart pulling back. So I've developed a patience just by observing the charts. So some of it is, of course, the fact that I don't really need to take every single trade I see, but there's also the fact that I usually know that there's a lot of time to enter a trade and you don't have to enter on the initial move. In fact, entering on the initial move usually, well, it's somewhat riskier entering on the initial move, but also the other side of that, because there's always another side, there's always a balance. Sometimes if you don't enter on the initial move, it never comes back to your entry, so you could miss out on a trade. So there's always that little bit of balancing act there. But yeah, that's patience. Which platform is the best to trade with? There's so many platforms. JForex is awesome though. JForex has a lot of great options. I like JForex. JForex is probably one of my favorite consumer level platforms. It's a bit clunky, but it has great options. Charting, not trading, charting platform, TradingView 100%. is just the best. Just for this tool, really. No, sorry, not just for it. It has a lot of amazing features, but this tool here is just the most amazing thing ever. Every platform should have this thing. It is so useful, so handy. You just get to quickly see your risk to reward ratio. No more calculations needed. So good. Charting platform, this J4X for trading, yeah. But trading, the actual place where you execute your trades. I mean, most platforms are fine, but J4X is definitely preferable over MT4 or MT5. Yeah, the more you're not chasing money, the more disciplined you become, definitely. Definitely, man. Marcelo, uh, based on the question from Naeem, if you could earn by, but everyone can read the question. I don't need to read it out. I mean, you're limiting yourself so much by doing that. Now, I know I only showed you daily chart examples, but when you go down to the lower time frames, there are so many trades that you can take. So many trades. The daily chart, you don't get as many setups because of what it is, because it's a daily chart. But dropping down to the lower time frames just gives you so many trades. You're really limiting yourself if you stick to the daily only. You're limiting yourself in a big way. Yeah, you can be profitable trading only the daily and only reversals or only continuations, but can you be profitable enough that trading generates a decent amount of money for you? Depends on your capital and depends on your goals, I guess, would be the answer to that. For most people, no. Most people want more than that. How to avoid fake pin bars? There's a few things you can do, but a lot of the times is fake pin bars just lead to a lost trade. But that's just the reality of trading. Trading contest, what? Oh, trading contests. Nah. Screw that. Trading contests promote irresponsible and stupid trading. And you know who wins trading contests? People who take massive risks and get lucky for the 1 week or 1 month or whatever that the trading contest runs. The winners of trading contests, they're not real traders because anyone can get lucky and make profit for a month. But the test of a real trader is, can you make profit consistently for years? That's a big difference. I can make 1,000 into 10,000 in a month if I hit a good streak, if I get a good trend. I can make 1,000 into 10,000. But what happens if I trade the same way the next month? And then the next month? What happens when I catch a losing streak instead of a winning streak? Because that 1,000 to 10,000, that was a result of a winning streak most likely, or at least a high percentage of wins. What happens when I hit a losing streak, which is always going to happen? That's just the reality of trading. You're going to hit losing streaks. When I'm trading such a high percentage of my account that I would be able to make that sort of return, when I hit that losing streak, all that money is going to disappear. Do you draw new support resistance lines when you trade lower time frames? No, I use the same support resistance lines on the down to the 4 hour. I use the same support resistance lines. I use different support resistance lines on the 1 hour, but that's a different strategy kind of. So I use Forex Tester, Forex Tester free to backtest. It's kind of expensive though, so it's not within everyone's budget. But yeah, I use Forex Tester free. I think in total it's probably going to cost you like $100 for the data for 3 months or something, and then the platform itself is I think 300. So you're looking at 400 in total, or maybe 300 in total. I can't remember. I bought like 3 copies of it over the past few years for me and for some of my students, and I'm always shocked by the price of it. Anyway, guys, I've done like 45 minutes of questions and my voice. I think I actually have a special link. They sent me a link at some point, and they're like, you can earn money if you use this link. I don't really like doing affiliate deals, but I said to myself that any money made from that affiliate link I would donate to charity. But I don't know. I never use it though because I don't really like affiliate deals. I think they compromise your integrity. But also I just think they're kind of like dodgy because it's a bit of a conflict of interest when I recommend something just because I have an affiliate deal with them. The point is, the reason I'm bringing this up is there's a massive discount on my affiliate link. The reason I put that massive discount is basically the way the affiliate links work is if you want to offer a discount to people who use your link, then you're losing part of your affiliate bonus. So I put it as low as I possibly could. That way I earn almost nothing. And the amount I did earn, I was going to send to charity, but I never actually used the affiliate link. So I never sent it to charity because there's been no sales from it. My point is, I'm trying to find this link while I'm babbling on here so I could send it to you guys. That way you can get a discount on it if you want it, but I can't find it because I never use it. Yeah, I'm sorry guys, I don't think it's going to be here. Yeah. Yeah, sorry guys, I can't find it. Whatever. Just Google it. Google Forex Tester discount. I'm sure you'll find a link if you Google it. Surely there's like 1 million people who have affiliate links out there. Oh, here we go. I found one for you guys. Wait, this looks dodgy. Oh, whatever. Just Google it. Find it yourselves, guys. Sorry. I don't want to. There's a link to Forex Tester free. It's just a backtesting platform that we were talking about. I don't know where the link I have is because I've never really shared it, and I'm sure you can find one if you Google. Sandra, you're a smart person. You have proper risk. Good work. Yeah, I mean, I know it's perfectly fine to promote a product, but I just really don't like doing it. I'm just not a fan of the affiliate stuff. It's not me. Don't feel comfortable. I'll see if I can find a link for you guys and I'll donate the money to charity if anyone buys it, and then I'll give proof or something with a receipt that it was donated. Trade Interceptor. Yeah, actually, that's a good point, Patrick. I remember Trade Interceptor. It's not as good as Forex Tester. Forex Tester is very good, but it's also very convoluted and complex. Trade Interceptor was a lot simpler. Also, guys, I forgot to mention, you can also use the replay feature on TradingView. So you click this, you click that, and then you can replay candle per candle. It's not a very good way to backtest because it only prints a whole candle. So it's nothing like Forex Tester that actually plays the candle as if the market was actually open, and you could speed it up and slow it down. But yeah, if you're back testing on a budget and you're using TradingView, you could do this. Oh yeah, you just said that. I swear I didn't read it. It just popped into my head probably roughly at the same time. There's a recording, Stephen. The stream description says this is the first day. George, you messed that up, man. No, it says day 2. George, you didn't mess that up, man. He probably just sneakily fixed it. Oh, it's the description, not the title. Damn, George. I hope you pay more attention to your trades than you do YouTube stuff, George. George started off as one of my students, but now he's a good trader now, and he helps a lot of my other students with their trading. George is a coach, but I hope he's not coaching anyone on how to set up YouTube descriptions. The win rate on my scalping strategy, no, not at all. I don't like sharing the win rate on my scalping strategy because most people are going to call me a liar. But my scalping strategy has over a 70% win rate. I don't know why or how it's even possible. And I don't think it's going to last consistently. I think it's just a very good year or just a very long and lucky winning streak. I said over 70%. First of all, anyone trading my scalping strategy, you are not going to achieve the same results. There's no way you're going to achieve the same results. And this isn't me bragging. This is because I've been doing this for a long, long time. So I can read price action at a high level and I understand what's going on. Again, this is not me bragging. It's just facts. Like if someone was saying, someone who's been a carpenter for 50 years, saying they make amazing tables because they've been doing this for a long time. That's not bragging. That's just, it's a fact. I've been doing this for long enough where so you're not, anyone who I share my scalping strategy with, you're not going to achieve those same results. You're going to achieve 50%, 60% maybe if you're very good. But that's completely fine because the risk to reward ratio on my scalping strategy is 1 to 3. So even with a 30% win rate, you're going to make profit on it. So, yeah, 50% I would say is achievable for most people after a little while of trading. Maybe after a few years, you'll be getting up to... Look, the reality is that 75%, I don't think it's not even 75. It's over 70, but it's not 75. It's between 70 and 75, somewhere around there. It obviously fluctuates a lot because it's a scalping strategy. So my point was, with that 70 whatever percent, I'm not trading the scalping strategy like I would trade a normal strategy. I'm not trading it day in, day out. It's not my main strategy, so I only trade it when there's very good market conditions for it, when stuff is trending heavily. So that number is heavily skewed because, I'll trade this strategy like a few days, let's say 6 days out of the month, but I'll pick the best 6 days. I'll be like, oh, stuff's trending, so let's go for it. If you were trading it every day, if I was trading it every day, that 75% would definitely be lower because I'd be trading it through the crappy days too. So that number is not really a fair assessment of the strategy itself. And that's not even mentioning, well, I've already mentioned it, the fact that I've been trading it for a long time, so I have a good idea of what to do. No, there's no recording of the scalping strategy. I'll probably share the scalping strategy at some point, but not right now. A lot of people use my strategy with Fibonacci, guys. Anyway, guys, look, I'm gonna get out of here. I'm sorry, my throat is just deteriorating rapidly. It's getting worse and worse, and we're not really talking about what the actual content of this webinar. So I think we're gonna wrap things up, guys. Yeah, there's yesterday's webinar flow ride for Flow Rider. Yesterday's webinar, I'd talk about support resistance. So yeah, thank you guys, and I'll see you. I'll see you soon. I'll probably see you. Well, a lot of you on the forum. Those of you who are members, and those of you who aren't, I guess I'll see you on the site and stuff like that. Thank you for attending, and bye bye.